Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's dive right in. Today, we're going to break down a trading pattern that, it trips up so many traders. It feels like the market is playing a trick on you, right? Well, we're going to master this pattern, what I call the flip, so you can stop being the one getting trapped and start being the one who actually profits from it.
Okay, be honest. Has this ever happened to you? You're watching the charts, you've done all your homework, and you see it. The perfect setup. It looks amazing. And then, bam! In a split second, the market just rips against you in the most painful, frustrating way imaginable. So picture this. You've got this beautiful, crystal clear support level. The price has bounced off it not once, not twice, but multiple times. It looks like an absolute floor, like it's made of concrete. You know, every trading book out there tells you this is a golden, high-probability buy setup. And just as you're watching, the price comes down, kisses that support line, and starts to bounce. So you do the logical thing, right? You pull the trigger, you buy. You're feeling good, you think you've just nailed the bottom. You even set your stop loss nice and tight, just a little bit below that line for safety. And then it happens. Smash! A massive, angry-looking candle just plummets right through that floor you thought was so solid. There's no pause, no hesitation, just a straight, violent move right against you. And just like that, you're stopped out. You get that notification, that sinking feeling in your gut. It's a losing trade. And look, losing trades happen, right? It's part of the game. But the real sting, the part that really drives traders crazy, is what happens next. Because what happens is the price then rallies back up, right to the scene of the crime. It gives you this tiny glimmer of false hope. Maybe it'll get back in your favor, but no. It kisses that exact same line, your old support, from underneath, and then just rejects it and drops like an absolute stone. So not only did you lose money, but you completely miss the actual big, profitable move. So what in the world is going on here? Is the market just out to get you? No, absolutely not. This isn't some random cruel trick. It's actually a very predictable pattern driven by pure human psychology. And it has a name. It's called change in polarity. So let's unlock exactly what that means. Okay, so here's the big idea in a nutshell. Change in polarity is basically this. When a key support or resistance level breaks, it flips its job. That's it. What was once a floor that held the price up now becomes a ceiling that pushes the price down. And vice versa. The old ceiling becomes the new floor.
And the secret sauce that makes this all work, it's 100% human psychology. To really get this, you have to put yourself in the shoes of those traders who bought at the support level, the ones who are now trapped. What is the one thing they're all thinking? They're praying, please, oh please, just let the price get back to my entry so I can get out without a loss. And this leads to a really, really important mindset shift. You need to stop thinking of support and resistance as hard lines or concrete walls. They're not. They're more like zones of agreement. They're battle lines. And when one of those lines breaks, it's a huge signal. It means the sentiment has totally shifted. One side of the battle just gave up, and the other side is now completely in control. All right, now here's the really cool part. This whole principle is like a two-way street. It works perfectly in both directions. It's not just for when the market is falling or just for when it's rising. It's a universal law of market structure. So let's break down the two sides of this flip. You'll see it's the exact same psychology at play, just perfectly mirrored. When support breaks, that old floor becomes the new ceiling. Why? Because all those trapped buyers are desperate to sell and get out at break even. On the flip side, when resistance breaks, the old ceiling becomes a new floor. Why? Because the trapped sellers are panicking and they have to buy back their shorts. Okay, let's walk through case number one. This is the exact scenario we talked about at the beginning. A key support level shatters. Every single person who bought there is now underwater. They're in a losing trade. So when the price pulls back up to that level, what do you think they're doing? They're not thinking, oh, what a great time to buy more. No way. They're thinking, thank goodness, here's my chance to get out at break even. And all of that selling pressure is exactly what turns that old support into new, powerful resistance. And now for case number two, the mirror image. The price just explodes through a major resistance level. Now think about all the bears who shorted there thinking it was the top. They are in full-blown panic mode right now. So when the price dips back down to that level they shorted, they're not thinking about shorting again. They are scrambling to buy back their positions to stop the bleeding. And that massive wave of buying is what turns the old ceiling into a brand new, solid floor. You've probably heard of this. This is your classic breakout and retest pattern.
Okay, and here's a little pro tip for you. This whole psychological game isn't just for flat horizontal lines. It works the exact same way with diagonal trend lines too. So if you see a long-term upward trend line get broken, you can bet that it's going to act as new resistance if the price pulls back up to it. It's a really powerful little addition to this whole strategy.
Okay, so we've covered the what and the why. We get the theory, but theory doesn't make you money, right? A solid, repeatable plan does. So now let's get super practical. Here is a simple 5-step checklist you can use to actually trade this setup.
All right, let's walk through this step by step. Step 1 is detection. You need to find a really obvious support or resistance level that's been broken by a big, strong candle. Step 2, and this is maybe the most important part, is confirmation. You have to wait for a pullback. Be patient. Do not chase that first breakout move. Step 3 is your entry. You only get in after you see a clear rejection candle right at that newly flipped level. Step 4 is the stop loss. Place it just beyond the flip level. Give it a little breathing room. And finally, step 5, your target. You're going to aim for the next major support or resistance level on the chart. Simple as that.
You know, when you really master this, it fundamentally changes how you look at the market. You get out of the prediction game. You stop trying to guess if a level is going to hold or break. Instead, you become a reactor. You let the market show its hand first, and then you jump on the high probability opportunity it creates for you.
Look, if you forget everything else, just remember this one simple mantra. The entire strategy boils down to 3 things. Wait for the break, wait for the flip, and then trade the retest. When you do this, you stop fighting the market. You start flowing with it, trading alongside the smart money.
And so that really leaves us with one final crucial question for you. Now that you understand the psychology, now that you see the game being played, the choice is yours. Are you going to keep being the trapped trader, the one who provides the fuel for these moves? Or are you going to become the patient, smart trader who understands the setup and profits from this predictable human behavior?
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.